How much money would you make if you had 100 shares of ticker CONY? Welcome back to the channel, guys. My name is Spencer, and I talk all about investing. And these YieldMax funds have been taking a beating recently. But because you guys loved the MSTY video, 100 shares, I'm going to do another one today so we can look at CONY and kind of compare it to MSTY and maybe a few other of the YieldMax ETFs. Now, there's a lot that goes into these videos. We're going to take a look at CONY stock and Coinbase stock, which is the underlying stock that CONY writes the call options on. And then we're going to check out the drip calculator to see how it's done in the long term. And then we're going to jump into our two calculations. We're going to see how much money you would have made last month, both with dividends and price reduction, because we have seen the price fall for CONY. And then with the last year as well, just like we did with the MSTY video. So I hope you guys enjoy. If you like income ETFs, if you like dividends, if you like making money in the stock market, you are in the right place. Don't forget to like the video and to subscribe so you don't miss any future episodes in this series. I appreciate you guys so much. Let's roll the intro. This may be a hard video to watch if you're a diehard CONY fan. I like this fund. I've watched it for a long time, and I had no idea it was this bad. I mean, it's down 68% in the last year alone. We go down to 1 month, and still it's down 29.5%. Absolutely insane, this drop. And we did see it run all the way back up almost to 20, and since then, it's just been selling off. The interesting thing, and I don't really understand why CONY has been tanking as it has, because we had a pretty good span. The last 6 months of 2024 were pretty decent. We had a crazy rally into November, which of course we saw because of the election news, and then it started to sell off. So I guess maybe it fell down a little bit when it started to climb back up, and then this recent fall, I mean, it's just, it reached new lows and just continues to downtrend. So I'm definitely not a fan of that. Is this a good time to buy? I'm not sure. I definitely think we'll find out pretty soon. But to fully understand CONY, we need to understand Coinbase stock. So let's jump into that chart. Looking at the same time frame, you know, Coinbase was a stock that I bought on launch. And I was bummed because I bought it about $300. It ran like mad up to $340 and then tanked. And I held it all through this time. And then I sold it when we hit $300 again. Didn't lose any money. Definitely didn't make any money. And now we're kind of seeing it pull back even more. On the 1 year, it's down 21%. Not nearly as bad as CONY. Not nearly as bad. On the 1 month, we're down almost the same, almost 29%, which is kind of interesting actually. So it's been beaten up. Like I said, you know, crypto, I've talked about this in the last couple of videos. Crypto is on the downtrend, I would say. I'm not a crypto investor. I mean, I have money in crypto, but I wouldn't call myself a crypto investor. I bought a long time ago, and I don't really even want to figure out how to sell it, to be honest. And so I just leave it. But I think crypto, I've seen a lot of comments talking about the crypto winter. We're seeing the cool down. It ran like mad. We had a lot of news with the elections and whatnot that were impacting it. And now we're seeing a sell-off. So is it time to buy? I don't know yet. It'll take a little time to really understand. I will probably be buying more crypto eventually just because I do like some of the returns that I have seen. So, and I only like a few specific coins, I will say. But all in all, Coinbase stock, it actually is looking near like a decent buy. If it drops to the 150 area, I might be scooping up some shares, but it could go much lower like we've seen down to the 60s and at the very low $33 a share, which is absolutely insane. But we'll go back into CONY. Let's check out what their YieldMax website says about this fund, the distribution rate, and a lot of other details. 95.41% distribution rate, which is absolutely insane. And I am going to double check that because I want to see it on Seeking Alpha as well. Sometimes it gives you a different perspective, and the calculations can be a little bit different, which is important to note. I like having all the resources available to me. But CONY absolutely paying out big time. But remember, it is paying out so much because the price is dropping so significantly. So in the last year, if you took the average dividend and you plugged it all in and calculated it based off the price a year ago, the distribution rate would be vastly different than it would be today. And that just goes to show how crazy things can change in this market. Now, I still am a fan of CONY. I don't have any of it in my retirement fund, but I've owned it over and over and over again in a number of different accounts, mostly for the YouTube channel. And so I'm not making this video to just hate on it. I think it does have a place, especially during the crypto runs, where it could be really, really profitable. And who knows, even in this market, maybe it will still turn a profit. We'll see at the end of the video. I'm really curious. I haven't put in all the calculations yet, so I'm going to see it the same time as you guys, pretty much. But there's a lot of details I think everyone should know about CONY. We'll go over the distribution details on Seeking Alpha. You can see it in a chart, and I like it a little bit more. This, again, is an income ETF. YieldMax, they primarily focus on income ETFs. There's different ETFs, if you didn't know that. You have like growth ETFs like SPY, which the goal is for the price to just keep going up and up and up over a long time span. Then you have income ETFs. And what this is you put your money in and you get money back immediately, right? So SPY, it might take a couple years till you really start selling it off if you have a good return. Whereas these funds, they pay you out in dividends. And what that means is you might lose some NAV value if they're not doing it correctly. If the market's choppy, you might see worse returns, less dividends, dividends all over the place. And so this is not a growth ETF. You don't buy and hold CONY for the long term because you think it's going to go from $8 to $50. It's not like a normal stock. And I think people get that a little bit confused sometimes, and it's just really, really different. But the investment objective, primary investment objective, is to seek current income, aka being paid immediately through these dividends that pay out more than once a month because it's every 4 weeks, so it's 13 times a year. The fund's secondary investment objective is to seek exposure to the share price of the common stock Coinbase. So if you are a big fan of Coin, COIN, the stock, and you think it's going to go back up to 300, you would likely do better holding Coin than you would holding CONY. CONY is going to get you that current income via distributions, whereas Coinbase will give you growth. And so you are capped. You can get some growth the way that they write the options, but it's not the point of CONY. That is the point of Coin, the stock, to grow. They want to grow. They want to expand. They want to make more money, of course. So we can actually see the gross expense ratio of CONY is 0.99%, which if for you guys that have been investing in the YieldMax funds might not be too shocking. For anyone that is new to these funds, it's very shocking. It's very, very high. It is one of the highest that I've seen actually. And so interesting. We can see the net assets, 902 million, a ton of money in this fund. It is very, very popular, despite the fact that it's down nearly 70%. So that's the gist of all the data that I wanted to talk about. You can see their 1 month chart. They're down 21%, 3 month, 24%, 11% on the 6 month up, year to date down 11%, 1 year up 11% in the NAV, and in the market 9.36%, which I believe this is cumulative. Cumulative means with the dividends factored in and annualized since inception. So interesting data here. Always good stuff. I always recommend checking out their websites. Let's check out the dividend history and see what this fund is really made of. There's some interesting things going on with the distribution history. We did see it absolutely rocket, at one point paying out over $2.60, almost $2.80. And since then, it hasn't paid out too insanely well. I mean, it is still a lot. It's definitely a high percentage, but $2, we've seen it drop really drastically recently, 83 cents, 105, and now 60 cents, which is, I believe, the lowest payment we've ever seen is 60 cents. Not good news, that's for sure, but you know, we've seen the market going all over the place. I will be doing a video on implied volatility and how that plays a role in these ETFs because I'll be honest, I'm not an expert on it, and it doesn't make a lot of sense to me how we have insane volatility right now, but the payments are still lower. The price is still dropping. So I'm going to try and do a deep dive with you guys to understand that stuff. So should be interesting. I'm going to try and work on that in the next couple of weeks. For those of you that don't know, I am going to Las Vegas for an ETF convention, which is happening at the end of this week. So I'm really excited for that. We're going to do some vlogging style content. I hope you guys enjoy. It's going to be nothing influencer really. It's just going to be me talking about stuff. That's the way it's going to go. We'll show you around the conference, give you some cool details, and I'm going to share all the knowledge that I learned because there's a lot of CEOs doing presentations, a lot of information going to be shared, and I'm going to be sharing it with you guys. So it's going to be really fun. I hope you guys like and subscribe if you're interested in that type of content as well. We'll see how it does on the channel. Of course, I'm going to continue doing the same way that I've always done with my regular content. And so I'm trying to figure out how I'm going to film the weekly dividend ETF updates while I'm there because I'm not going to have my studio, aka my bedroom. So it's going to be really interesting how that plays out. But we'll see. I'll try and make it work if I can. We can see the distribution history. Like I said, the highs all the way up to 280, but that was all the way back in May of 2024. And it didn't really, it did okay in November because we saw it run a little bit, but we've really just fallen off a cliff. We haven't seen it this low. The price has not been this low and the dividends have not been this low. So it's kind of pointing out in every way, shape, and form as falling. Like, I don't want to say dying, but you know, it's tough. So we can see the dividend yield trailing 12 months. And the reason this is so insanely high at 212% and why I wanted to bring this to your guys' attention compared to the one on their website is because this is factoring in the last 12 consecutive payments averaged together. So the way dividend yield works, oh man, I shouldn't go down that rabbit hole. Anyways, the way that they're figuring this out is the dividend payments were really, really high, but the price was also a lot higher. So now that we're down to $8 a share, $8.40, the dividends that were paying out $2, that'd be a 25% dividend, and that was paying out monthly, every 4 weeks. So the way it's factoring in, the dividends were way high. Now the price is super low. So the trailing 12 months is different than what their yield is just based off the last dividend. So we're going to look at both of those, but it's definitely an important metric to think about. It's not yielding 212%, now. We've had some NAV erosion, and I'm going to factor that in. It is tough to factor in, but we're going to do our best to make it as accurate as possible with the data that we have. But first, let's throw it in a drip calculator and see if this thing is able to still be positive after all of these insane weeks of dropping. All right, we have CONY in the dividend calculator, drip calculator. This is dividendchannel.com, and here we go. It's still positive. It's not even close. Wow, that is actually really impressive. I'll be honest. Again, live reaction. I didn't pre-record this. It's pretty phenomenal. I'm really surprised it is so high. So we can see $10,000 invested in 2023, late in 2023. You would end up currently with $17,450. A crazy drop recently too, which I will address, which we have seen on the chart. Now, really wild. That's what dividends reinvested. With dividends not reinvested, you're getting 80% total return and an average annual total return of 45%. So better with dividends not reinvested. Now, how does that make sense? Everyone always says turn drip on, have dividends reinvesting. Well, the way it works is if you're buying every month, every 4 weeks, I have to fix that. I keep saying every month. It pays every 4 weeks. If you're buying every 4 weeks, boom, 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 boom. If you have drip on, when the price rockets, like when CONY does well, and the underlying, or when Coinbase does well, and the underlying CONY does well as well, you can see it actually is going to be buying over and over and over again at these higher levels. So that when it falls, your cost average is above the current price. Because even if you bought, say, here, and then it went to here, you're averaging in every dividend. And because these ones pay such insanely high dividends, or the YieldMax funds, that is, they can really bring your cost basis up very, very quickly. So then you're back down to here, your price, your now cost average is above what the current price is, and then it rockets again. So now you're buying more and more and more. So because it has been so rocky, it's been so high for a long time, and then it sells off, it really impacts your returns with the dividends reinvested. So my strategy now, and I haven't tried this out yet, but I have talked about it in the other video, is all of these funds rocket, when MSTY does well, ULTY, CONY, TSLY, which has been beaten down even more than CONY, if you can believe it, NVDY, when they rocket and they're really high, I would turn drip off. Keep that money, and then when it sells down, reinvest it. And this is a different way of doing things, I will say, because I'm a long-term dividend investor. It's how I invest in my Roth. And so if I buy a company like AT&T, and then it tanks, I go, oh, you know what? I'm accruing those dividends over and over and over again, but the growth is there. And so the long-term goal for those is growth. And that's different for these funds. It'd be great if you could get really good growth and capital appreciation, but it's just not the idea behind these funds. It's not their initial, their goal, really. Like, it would be great, but again, if we could have all the money in the world, that would also be great. It's just not how these work. So a really important factor. I was surprised the drip calculator is so green. I'm happy about it. Good news. Pretty crazy that in just a couple of years, you would still be up 45% average annual return, which is far better than what we've ever seen average with S&P 500, with a lot of the top stocks. So very, very impressive nonetheless, even though it is really beaten down. And I will say your 17,000, or I should say 18,000 now with drip off, the difference here, you would have been with drip on at over 25,000. So really significant, really a lot better returns, and over 20,000 with drip not on. So the difference between these two is pretty wild. It's pretty wild. So let's jump into our calculation and see exactly how much money you're going to make. So everything plugged into the market beat calculator. It's really complicated running the numbers for this. I've been working on it for about 50 minutes now because it's not an easy calculation to have. So I'm just going to calculate it for the last month. What would you get in the last month? Well, we can see 100 shares and a dividend of 60 cents would get you $60. Your ending balance, you're actually down on this amount of money by a bit of money. So let's talk about it. So 839, but we're down. We're going to multiply this by 0.295. And so you're actually down $247, which is not good at all. So 839 minus 247, 839 minus 247. And then we're going to add 60, and you're at $652 in the last month. So you are negative on the month. And we can actually figure this out. We'll divide it by our initial investment of 839 and multiply it by 100. And yeah, there we are. You're at 77%. So you're down 23% on this month. And now when I try to blow this up and do a full year, it's really hard to do. And it's not super accurate because the last dividend has been so low where it makes it really, really complicated to try and figure out. But wow, I'm definitely bummed to see this, that you would be down the last month, but it's something we expected, right? It's definitely something we expected because of the way the market has been trading. Coinbase is falling. A lot of these funds are falling, and a lot of the underlying stocks are falling. Implied volatility is not holding up for some reason, even though it seems to be high. The dividend payments seem to be lower and lower and lower. Now, a cool thing to do is if we had had our $2, you could multiply 100 times 2, and you would get $200, and that would completely negate all the losses and the NAV drop pretty easily. But we just haven't had the dividends high enough. That's the thing. So it definitely is a bit of a bummer. Now, I'm not saying that I'm not going to be investing in these in the long run, and I will be doing an updated video on our YieldMax only account, which has been performing terribly, but some have been holding up better than others. And I like to do that because I like you guys to see the ones that are performing better by someone who actually owns them. And that's why I do those challenges, those accounts. I have so many of them now. The weekly dividend ETFs, the YieldMax ETFs, high yield ETFs, stock ETF that I created, all these things, which is on my smaller channel for those of you that are interested, where I talk about stocks and dividends specifically, not income investing like we do on this channel. But if you're looking for this for motivation, it's just, we're not going to have any motivation for CONY for a while. The long term looks amazing. The drip calculator looks fabulous since it started trading, but it's just tough. And if you, again, if you think you have it bad, look at TSLY. If you own TSLY as well, you know what I'm talking about. I think it was down 81% with the drop in Tesla recently. Maybe it's back up a little bit, but holy smokes, that thing has been dropping like crazy. Absolutely, absolutely falling. I hope you guys enjoyed this video. A little bit of a recap. $60 every single month from 100 shares of CONY. Is it going to continue at that rate? I don't know. Are we going to see the distributions fall? I don't know. When we compare it to MSTY, over the 12-month period for MSTY, it was up 55%, but month to month, it was bleeding as well. The whole market is red. We've seen a lot of things dropping. So right now, there really isn't an easy way to pick which one should I buy between these because everything is so beaten up. When everything starts to kind of rebound or at least settle down a little bit, it'll be easier for these calculations. And I'm debating continuing on this 100 shares. If you guys like it and you like to know, how much money you get per month from the 100 shares, let me know in the comments down below and let me know what ticker you want me to do next. I really appreciate all the support. You guys have been absolutely fantastic. I can't even believe you guys are so nice to me. Even if I do make a mistake, you guys are super, super kind. So I really appreciate it. As always, let me know if there's anything you want to know down in the comments, and I hope to see you in the next video. Don't forget to like and subscribe.